Get back to jobs here, though, for a moment, and this debate over whether the glass is half full or whether it's half empty, with wages going up and job growth weak last month. From Walser Wealth Management, President Rebecca Walser is with us today. Granite Share CEO Will Rhind is also here in the studio, as is the Wall Street Journal's James Freeman. Dow's down 185. The futures, James, were down about that much, I suppose, when the report came out, and you thought, well, maybe they'll tank. Went down about 200, then came back. I think maybe investors do see both sides of this coin, but half empty or half full from what you saw this morning?
Yeah, and I think investors maybe are thinking, okay, the next interest rate hike is a little further out on the horizon too, but
like never.
Look, the wage information is great news. 3.4% year-over-year growth, tremendous, excellent. But the number 20,000 is a big downer, and one of the reasons it was so disappointing is we saw yesterday the National Federation of Independent Business has been surveying small businesses for 45 years. February was the best reading ever for job creation in that small business economy.
So maybe there is a little noise or something's a little off with it. I mean,
let's hope it's a fluke. I mean, you look at the average of the last few months, it's still pretty good, but this was a downer.
It plays into what we've talked about, Will, which is the global slowdown with the European numbers we had yesterday and the Chinese numbers we had overnight. What's your take?
Yeah, I think for me it's a sign that things are definitely slowing down here. I mean, one thing that I was looking at before this was the Challenger report in terms of job cuts announced. That's the highest now in 10 years. So this shouldn't come as a complete out-of-the-blue surprise to people, although the number definitely is lower than even I would have expected.
It was lower. Well, it was lower than everybody expected.
I think it's just another sign here that things are maybe starting to slow down, and we've maybe seen peak jobs.
All right, Rebecca, weigh in on this, and we'll talk about it more broadly. What do you think?
I agree with James. I mean, the actual pace of wage growth was the fastest since 2009, so that is a huge indicator. Obviously, 20,000 is a gut punch. It's like, where did that number come from? So it was obviously a shock. The market obviously didn't like that, and it's not going to like that. But I'll take President Trump's and Cudlow fluky, and let's take the average. And if you look at the average the last 6 months, 232,000, last 3 months, 180-something thousand. So we're still good. I think the underlying fundamentals are still good, Colin, but,
the other
it's scary. It's a little bit of a slowdown.
Well, because other parts of the world are already in that.
Absolutely. I mean, look at ECB yesterday. I mean, we've got global slowdown, and when it's going to come here is the question.
Well, let's talk about what James said, and that is that kind of, you said the Fed, but central banks in general kind of adjusting their strategy, right? We already saw it from the ECB, and maybe you're right. Maybe we do see it even more so from the Fed, where the next move is cut rather than hike, right? Don't you think? Or
yeah, so one of the reasons this may be a little bit of a downer as well is we seem to be seeing a difference where slow growth Europe, which never really reformed its economy, is still relying on ultra cheap money, loose monetary policy. We've had a sense that we've kind of moved into the real economy, and there's been a lot of good data over the last couple of years to say that, the Fed can think about further rate hikes in the future. But, this is a bit of a reality check on what we thought was really robust job creation.
So what does the Fed do with this information then, Will?
I don't think there's any change. I mean, as James was saying, I think that the challenge was, how can the U.S. continue to tighten in a world where everyone else is loosening?
Yeah.
And I think we saw the limitations of that at the end of last year. And I think this year, it'd be very surprising if there's another rate hike.
So there are two things that we talk about all the time ad nauseum, and one is the Fed and the other one is China. So, Blake got into this at the end of his report now. In the last few days, there have been doubts raised about whether we're really going to get this deal with China. I think most investors, if you said maybe even a week ago, I think we're making the assumption that we would. Have you changed your thinking on that at all? Or?
Well, Connell, when you have 6 MOUs that are negotiated and signed, and then nothing comes of it, and presidents aren't meeting, it's a little bit of okay, what's actually happening here?
We don't like MOUs, we're told. That's what the president says. Don't call it that anymore.
Oh, okay, I'm sorry.
I'm kidding.
But the fact is that this deal has teeth, right? This deal has teeth. It actually has, if you don't live up to your deal, this is what's going to happen.
Well, that's the point. Like, that's if China agrees
that's the problem, though. I think that's exactly why we haven't seen it come to fruition yet, because if they don't do it, they can't just sign a piece of paper that has no meaning. If they don't do it, there's actual repercussions. And so that's why I think now the delay is, you mean you're not going to just look the other way if I don't actually live up to my agreement?
Maybe I should explain that a little bit, and then we could talk about it. But I thought that was interesting the way Cudlow phrased it. It was Stewart who interviewed him earlier today. That there's this whole debate about how we're going to enforce a deal with China. So the United States apparently has been saying, well, if you guys don't play by the rules, we're going to put the tariffs back on. But if we do that, you guys are not allowed, being China, you can't retaliate. And Cudlow was basically saying, well, that was in writing. That's in the deal. But that doesn't mean it's been approved by China, as he actually said. So I just find it hard to believe the Chinese would say, you know what, fine, we're in for this. That's a tough one.
Connell, I like to be an optimist.
Of course,
person,
no, I'm
but
saying,
when you say this big economic decision is awaiting action by the Politburo,
right?
I mean, who can get excited about that?
Right, it could be in writing on our end, or even on the minister's level. But yeah, that's a big hurdle, right?
So I'd say at the margin, this crummy jobs report puts more pressure on President Trump to strike some kind of deal. The Chinese economy is under pressure. Obviously, being a dictatorship, their political system doesn't feel the same immediate political influence that ours does.
No.
He will never have to face another election. So,
but he does face pressure internally from that Politburo.
And I think it's now an economy that's obviously exposed to markets. It can't completely ignore these markets that it is now engaged with around the world. But as far as predicting when and how and will the deal be honored, hard to be optimistic.
How much pressure do you think is on the President of the United States to make a deal? Because the stories that we've had for weeks now is that there's more pressure on the Chinese. I can tell you, I talked to somebody close to the Chinese side this week who thought, I don't know how much they mean this or not, but they thought that the failure, as they saw it, of the president in the North Korea talks meant that he'd be more likely to make a deal. I don't know if that's the case or whether these economic numbers play into it. What do you think?
I think there's a lot of pressure on him to make a deal. I mean, this is two world's largest economies. I think my belief is the politicians will find a way to make the words right, but it's the substance of it which everyone will be looking to. I mean, the president will look at the UK, for example, my own country, and say, well, there's a perfect example of what not to do in any kind of result of a hard Brexit.
I didn't know you were from the UK.
We're wanting to avoid that at all costs. So I think there's big pressure on him to make it work, at least get something that both sides can claim to be a victory.
What if they don't? Markets, what do you think?
We need it. I know, John McConnell, we need it. I mean, and I do see the logic of he didn't get North Korea, so now he's got to get China. We need China, especially after 20,000 jobs today. We've got to have it.
But that's the problem in some ways, is that if it's too much to just boost the stock market, well, maybe do we get the right deal? That's the concern.
And look, if they will not agree to embrace the rule of law, we should be on a full court press recruiting effort to pull talent out of China, get those entrepreneurs who are dealing with a harsh communist government over here.
That's interesting. I wonder how much the Huawei deal or the prosecution has to do with all this too, and whether that's another way to apply pressure that you're kind of talking about.
Well, look, I don't think you should put that into the trade negotiation. If they
keep saying it has
in the
nothing.
United States, they ought to be prosecuted. They'll have their day in court. I wouldn't make that part of this negotiation.
All right, we got to go anyway, but James, thank you. Well, good to see you. Rebecca, thanks.